widen. And it usually leaves, the price in the middle is usually now fair value because it doesn't change the price in the middle. You see that? It doesn't actually change fair value. If I go up 20 ticks and I go down 20 ticks, fair value is still the same price. Does everybody agree with that? Fair value is the difference between the bid and the offer, correct? Everybody agree with that? Yep. So when we look at fair value, we're always able to calculate where fair value is. You know, the price gives it, you get an idea from that price narrative. So if we go up 50 ticks, we're down 50 ticks, the fair value is still the same. And when we come into the actual data, we have where the liquidity is. Now, this is obviously liquidity, and it's perhaps now about, maybe these are the big liquidity levels. There's maybe 100 lots at this price, and there's maybe now 100 lots at this price. So this becomes the dealer keys. The dealer is now looking at this from a volatility point of view, which means that the fair value plus the spread is calculated from what? The volatility. So we get this idea of the dealer's implied volatilities, don't we? And that's when we get the dealer keys. So we get the dealer's implied volatility when we look at these real liquidity levels. And that comes from the idea of what the volatility is coming out in that data release. Because it's like an earnings report. If I have an event risk here, and this is an earnings report for stocks, then of course, when you look at the implied volatility in this earnings, let's assume that the stock is trading at $50. And the dealers come up with an implied volatility of 10% on this earnings report. Where's the dealer key on this, guys? What's your dealer keys on this? $45.55, right? So you're going to have an idea that the dealer's key is going to be a price of $45, and there's going to be a dealer's key of $55, right? Everybody agree with that? So when I looked at trading Snap last night, ticker symbol Snap, okay? So here's Snap pre-market just here. So we're coming into the closing bell here on Snap. I'm now trying to figure out, now I've got a positive skew on this stock, right? I've got a positive skew. And I had an implied volatility on this of 16%, okay? So it's closing at $9.70. So I'm looking at a top line price of $11.20, right? So here's my sale order coming onto the screens, right? There's my sale order starting to come onto my screens there. Because that's what the implied volatility is. That's what the dealer's implied volatility is in this deal. So I've got a bullish skew. I've got 16% implied volatility, which means I've got a potential upside risk, an upside profit of 16%. God knows what my downside risk is, but I've got an upside positive skew in this one of 16%, right? So I'm looking forward to Snap. Now, you'll see why I got into a little bit of a panic on this, because I picked up quite a lot of stock here. Oh, yes, I picked up quite a lot of stock in here. $9.70. And take a look at what happened. What the hell is that all about, right? So when it dropped into the aftermarket, I decided to buy some more at $9.20. Yeah, decided to buy some more at $9.20, and then all of a sudden, so we've now got an extra Brucey bonus in at 9.20. I've still got a target price of $11.20, which is nice. And then, of course, the earnings came out, and this is what happened. Right through the dealer's key. And as soon as we went through the dealer's key, I just polished off all my trades into these areas, and we had a pretty good day, right? We had a pretty good day. So we cleared 16%, no problem, which is always good, isn't it? Very good. So again, it's just about putting in the right trade at the right price using the dealer keys, because you can see it dropped all the way back down to the actual bottom edge here. You know, so you could have mopped up some more snap in that bottom edge price if you wanted to. It's not my style. I'm not a buy and hold investor, so I just want to take the spike and get out. But you can see if you bought some more at $9.20, you've had a reasonable good start to your day, because if we look at what happened to Snap on the pre-market, you can see Snap actually gave you a nice spike back up to $10.80 again. You know, and that's a pretty good trade outcome, isn't it? Because you've been able to maybe take some more trade in here, and then on the cash open, you can see it spiked up to $10.80. You could have made some more money after the price came straight back off of the profit take. Nice trade, right? Nice trade. It's the best trade of this earnings report season for sure. In fact, it's the only trade I've had this earnings report season so far. Every other trade so far has had a negative skew on it. So, you know, we've had a good look at a lot of different stocks. This is the first stock I've seen in earnings that had a positive skew. So it was the only stock I've been interested in so far. But to make 20% on my very first stock pick for this earnings report is pretty impressive. We've got quite a few tonight. We'll obviously have to wait to see what the skew is, but we've got quite a few tonight setting up. It's in the Twitter. A couple of big ones as well in amongst those stocks tonight that have a good number. We've got coming up after today's close. We've got Meta, EW, Flex, QS, Nova, and AEM. Meta's got a 7% implied. Nova's got a 21% implied. QS is 12, Flex is 7, EW is 8, AEM is 7. So we've got a fair amount of upside. If any of these trades can end up giving us a positive skew coming into the closing bell, I will be on board and using my Snap money to go again into my next stock pick. But so far, for earnings season, I wasn't able to buy a single one of the banks in the early part to the earnings season. I never got a single bullish skew on any of them. This is my first real earnings report buy, and I was very, very happy to pick up a 20% gain on my earnings bid.